Right, looking at the bigger picture, the price is rising within the previous month's range. So there's the previous month high. This is the low. This is the closing price. This is the previous week's high. That's the first obstacle. Once we get through the previous week's closing price, it's the previous week's high. Now, we are currently above yesterday's high, which has been essentially a stop hunt into last Thursday's lows, below the inside day on Monday, and now we're coming up towards the stops of the inside day from Monday, which takes us through the previous week's close. This movement broke Monday's low, so we're bullish above Monday's low. So we dropped below Monday's low on Tuesday, and then we broke up above Monday's low today. We've used it as a support level, as you can see. Okay, so Monday's low is a key factor. Above Monday's low, the bias is bullish. The bias is bullish, so we're on a bullish trend. And due to that bullishness above Monday's low, we've even taken out yesterday's high. So we've got a broken out market today of yesterday's high, which came first a fake out low, which we've just talked about. A fake out low, i.e., it broke Monday's low, failed to stay out, and came back up inside. So fake out low. So that's a double bullish scenario on the daily chart. On the weekly chart, the prior week broke the previous week's high. Okay, so that there is bullish above the previous week's high. So we're in a market that's made a new high. It dropped back below it, but then it pumped back up above it. So that also is a bullish factor. So we've got the daily and weekly chart aligned. That's good enough to anticipate a continuation of the upside targeting the previous week's high. So long as we stay above yesterday's high now, so long as we stay above yesterday's high and the weekly breakout level. So if we come back inside, then that would be a potential support level. But so long as we stay above, ideally, the weekly breakout level that we just looked at over here, that previous week high, then we are bullish. And if we stay above yesterday's high, then we can be anticipation of a continuation trade set up towards the previous week high. Does it have the legs to run there today? Well, we can use the ATR to assess how far that range is today. So $1.4 ish. And I believe the ATR is about 1.8. Yeah, 1.83. All right, so $180. I mean, that would take us 1.8 all the way up. So there's plenty of room to get to our previous week high target. So long as we stay above the previous week's, the previous week's high, so not last week's high, but the high we talked about over here. So long as we stay above that high there, we're in a rising trend, and you'd expect it, therefore, to take out the previous week's high. But you can have it as a target if you're looking to trade. Holding on with some left over, perhaps for it to continue going. Can't get the words out. To continue with its bullish trend. If we go out to the weekly chart, let's look at the daily chart. So strong support by the looks of things. Push up. Weekly chart. Strong support on the weekly chart. Market is going back and forth. Don't see why it can't come up again in this phase of consolidation that we're in. So bullish for a continuation in line with this box that's just chopping back and forth between the highs and the lows.